the everyday American has been 40 years at this point of being miseducated on the topic of gold. So they're not very much into gold. You go around the world, you get very different results. Switzerland, Germany, Austria, they love gold. Of course, China, Asian countries. I think Australians have a much better sense than Americans do. So there are the buyers of gold. But you say, well, okay, who are the big buyers of gold? The answer is the central banks. Now, right there, that should tell you something. So these are the most powerful, most plugged in, most heavily monetary institutions in the world. And they're the ones buying gold. Now, they would have you believe that gold's not money, gold serves no purpose. It's the first ones to say, John Maynard Keynes said it was a barbarous relic, which he never said, by the way. He said something, he used the phrase barbarous relic in reference to the gold exchange standard of the 1920s, which was a hybrid gold foreign currency standard, but the foreign currency is not gold. So he said that's a barbarous relic, but he never said that about gold himself. And actually, toward the end of his life, he favored, at Bretton Woods, he favored a global currency called the backward, backed by gold. And, it's not guesswork, there were papers he published at the time. And that was rejected by the United States, which kind of ran the show, partly because not to get too down on the weeds, but our Undersecretary of the Treasury, who was our representative at Bretton Woods, was a Stalinist agent. He was a communist. This didn't come out until the 90s, after the fall of the Soviet Union, when a lot of classified information was released, all the KGB files, etc. But it was revealed and fully documented in a book by Ben Style called Battle of Bretton Woods, that he was a communist agent. So what was he trying to do by insisting that, by running Keynes's idea off the road, insisting that the US dollar be the anchor? He was trying to destroy the British Empire, which he did, because he knew that there were far more claims on the Bank of England than they had gold, and that would be inherently unstable, and that would derail sterling as one of the global reserve currencies and undermine the British Empire, which it did. So that's a little bit of a backstory, but it goes to the point that Keynes was an advocate for gold at different times in his career and at the end of his career, and that when the central banks are buying, I should tell you something. Now, I've said for years, I've always pointed to Russia and China. Russia has almost quadrupled their gold reserves in the last 12 years, starting in 2009 through 2021. They've almost quadrupled from about 600 tons to about 2,400 tons. China, the same, from about 600 tons to about just under 2,000 tons that they report, but they're non-transparent. They have a lot more gold than that stashed in something called SAFE, the State Administration on Foreign Exchange, which is a secretive Chinese sovereign wealth fund run by an ex-PIMCO guy, by the way. He knows what he's doing. And they're non-transparent. So the People's Bank of China is kind of transparent. SAFE is non-transparent. So every 6-7 years, what you'll see is the People's Bank of China will announce, we've increased our gold reserves by 400 tons or 500 tons or whatever, as the case may be. And well, it sounded like they went out the night before and bought 600 tons. Good luck trying that. You can't do it. Well, what it means is that SAFE took some of the hidden gold that they had been acquiring slowly and in an accounting entry, moved it over to the People's Bank of China, and boom, there's 500 tons overnight. But of course, they had it all along, and they still do. So they probably have more. So Russia and China are big acquirers, tripling and quadrupling their gold reserves. But now we're seeing it in a lot of other countries. The Philippines, Vietnam, Mexico, Iran is a major buyer, but non-transparent. Turkey has drastically increased its gold reserves. These are major countries, and they're adding. So I look at that, and there's very good data from the IMF and the World Gold Council, so you can find this information. But the one that was just not doing anything was Japan. They had about 600 tons, but they had 600 tons for 30 years. And then just about, at this point, about 6 months ago, so late last summer, they bumped it by, I believe it was 50 tons, perhaps more. I look at the exact number, but it was over 50 tons overnight. It just went from, 600 tons to 650 tons, just like that. Well, here's what you know. Same thing I said about Russia. You can't buy 50 tons overnight. You couldn't even do it in a month. I mean, the dealers would be working the order. It would be disruptive to the market. It would leave a lot of fingerprints, put it that way. But what it tells you is two things. Number one, Japan had the gold all along. They had it in some sidecar or side account or Ministry of Finance hidden account, what as the case may be, and they chose to move it over to their reserve position, which they can do. That's an accounting entry, but they had to have had the gold all along, because you can't buy that much that fast. So then that begs the question: well, why all of a sudden? Why now, after decades of holding your gold level constant, you all of a sudden step up in a big way? A lot of possible answers to that. One, China's making noises about invading Taiwan. Well, if you're going to invade Taiwan, why not invade Japan while you're at it? It's just another chain of islands as far as the Chinese are concerned. And after this happened right around the time, maybe shortly after the U.S. debacle in Afghanistan, which was, the worst foreign policy, military disgrace, humiliation in U.S. history that I can remember. I don't know how far you have to go back to find a worse turn of events, and that there it was. Well, all of a sudden, allies all over the world, Israel, Japan, Taiwan, they're questioning the United States. Like, hey, we thought we're under your nuclear umbrella. You stand by us through thick or thin. Here you leave Americans behind enemy lines. Perhaps, now this is speculation, but perhaps Japan sees the threat to Taiwan, feels they may be in the sights of the Chinese, feels the United States may not be as reliable as one had thought, and says, well, we now have to step up a little bit financially, militarily, et cetera. And they're doing that. But that aside, that's a little geopolitical speculation, but that aside, the gold is real. They put it on the books. So the biggest buyers of the gold in the world are the central banks. By the way, from 1970 to 2010, central banks were net sellers. Now, some bought and some sold, but on net, they were net sellers. We had Brown's bottom in 1999 when the UK sold half their gold at the lowest price in about 60 years. They literally hit the bottom at about $200 an ounce, give or take. But since 2010, central banks in the aggregate have been net buyers. Net buying is accelerating. So what does that tell you? It tells you that the most knowledgeable players in the world are adding gold to their reserves because they consider that a prudent hedge to the US dollar, if you have US dollar inflation, or to collapse the confidence in central bank currencies generally, or they're just saying, hey, we're part of the club. By the way, here's a good trivia question for you. If you're in a bar and with a lot of brainy economists around, ask them, bet them a drink on this. Ask them what percentage of U.S. reserves are in gold. And the answer in China is about 2%. Russia's about 20%. You know what the percentage is for the United States? 75%. The U.S. does not rely on euros and Aussie dollars and Canadian dollars for its reserve position. 75% of U.S. reserves are in gold. So don't let any central banker, don't let Jay Powell or Janet Yellen or any of these others tell you that gold's not a monetary asset. We have the largest gold stash in the world, and 75% of our reserves are in gold. So that's the U.S. As they say, watch what they do, not what they say. When people talk about the price of gold, people say, well, gold went up, and then they say gold went down. But gold really didn't do anything. Gold is an element. It's atomic number 79. It's a very nice, very attractive metal. What changed was the dollar price. That's what people mean when they say gold went up. They mean the dollar price went up, and if they say gold went down, they mean the dollar price went down. But what does it really mean? Is that telling you something about gold? Or is it telling you something about the currency? And I would say when the dollar price of gold goes down, that means the dollar got stronger. Each dollar buys you a little more gold. And when the dollar price of gold goes up, I would say the dollar got weaker because each dollar buys you a little less gold. When you translate it into weight, I always think about gold by weight. That's why I keep talking about tons and so forth, metric tons. So fluctuations in the dollar price of gold tell you more about dollars than they do about gold. It tells you about the strong dollar and the weak dollar. So as the dollar price of gold goes up, what it means is that the dollar is getting weaker. Now, so if you want to know the dollar price of gold, just do a long-term forecast on the currency, and you'll get to the dollar price of gold very quickly. So when you say, is gold a good asset? Is it a good diversifier? Is the price going up in the long run? Great questions. And the way I think about it is, well, what's going to happen to the dollar in the long run, up or down? Well, what's the history of all central bank currencies? What's the history of all fiat currencies? What's the history of inflation? They all go down over time, not all at once. And that's another source of confusion because people look at, well, the dollar euro cross rate, or they say euro to dollar cross rate, is the most heavily traded liquid, foreign exchange cross rate in the world by far. So, and in the past, say 2 months, euro has fallen from about $1.20 to today it's about $1.13. That's a significant decline in the value of the euro and a significant increase in the value of the dollar. So a lot of times when people say the dollar is stronger or weaker, they're actually not thinking about gold along the ways we just discussed. They're thinking about some dollar index. But if you peel back the layers of the onion for every index, Dow Jones, Bloomberg, Fed, it's all basically the euro-US dollar cross rate. So yeah, there's some Canadian, Australian, and yen, and sterling. There's some other currencies in there, but the euro is the lion's share. So all these indices are really euro-dollar cross rates. So when people say the dollar is stronger, well, it's another way of saying the euro is weaker. But currencies tend to trade within a range. They'll get here or they'll go here, but they're not like stocks. Major currencies, they don't go to zero. I mean, Zimbabwe, yeah, but the Australian dollar, euro, they're not going to zero. But they don't go to the moon the way Apple stock or Amazon does. They can be strong or weaker, but they tend to trade within a range, which makes them interesting to trade because you can spot those inflection points. So right now, when people talk about the strong dollar, they're really referring to the dollar value of the euro. But you could have a situation where gold is going much higher in dollar values, and that would be, as I say, the weak dollar. And yet the euro could be falling faster than the dollar. So people always look at the euro and they say strong dollar, weak dollar compared to the euro. My only advice is look at the dollar price of gold. Use that as your thermometer. A doctor walks into the room, they see the patient, they don't know anything. What's the first thing they do? They take their temperature. So if you want to take the dollar's temperature, look at the dollar price of gold.